Hello, this is Mijun from Mijuran University. Let's begin today's Big Jushin news for July 7th. Welcome once again to Mijun, where we consistently uphold the fundamentals of United States stock investing. I'm Mijun Bayem. I hope you all had an enjoyable and relaxing weekend. Personally, I also feel like I spent the weekend in a relaxed mood for the first time in a long while. Thank you for joining me for the first broadcast of this new week. Today as well, I will first answer an important question left by one of our valued subscribers. This question is from someone using the identification Future Slara. Hello. Thanks to your constant efforts, I am gaining a lot. I think consistency is really important in building trust, and I'm grateful that you always show the same steady attitude. I have a question for Miju. Personally, I'm hesitating to invest because of the upcoming debt ceiling negotiations in August. This year, the United States government hasn't issued any treasury bonds and has instead borrowed money from various sources, but now it seems like they've reached their limit. If at this point the debt ceiling negotiations go well in August or September and more than $1 trillion worth of treasury bonds are issued, I think a downturn might come. If a large amount of treasury bonds are issued at once, interest rates will inevitably rise again, and then I think growth stocks might fall even more. In the past, in 2023, when a large amount of treasury bonds was issued all at once, there was a downturn for about 3 months from the end of July to the end of October. It was only after the Federal Reserve signaled at the November 2023 meeting that it would hold interest rates steady and that the possibility of further hikes was low that the market regained stability. And I'm curious about what you think about this, and how should investors respond? My question got a bit long because I tried to explain my thoughts in detail. Always stay healthy, and once again, thank you for your hard work in making these great videos. I think this contains very important information. At the beginning of every broadcast, I summarize the United States stock market situation for you. For the past few weeks, I've been consistently sharing a positive outlook. Right now, it's a Goldilocks situation. I've often said that it's not too hot or too cold and that this kind of environment has formed where the stock market can steadily rise for a while. And if you look at the title of the video where you left your comment, it's also a positive message saying that a strong buy signal has appeared in the United States stock market. That's why many people might think, based on Mijuan's opinion, that the United States stock market will keep going up, but that's not the case. Let me say this again. When it comes to investing in stocks, predicting the future is meaningless. So trying to time the market, figuring out when stocks will go up or down is impossible. I've mentioned this several times. Nevertheless, there is a reason why I consistently express a positive outlook. In my opinion, there's only one thing that investors should be concerned about and really worry about. This is the bear market. A bear market refers to a period when the index drops by more than 20% and the decline lasts for over a year, a very tedious, frightening, and difficult time. From an investor's perspective, I think there's nothing as difficult as a bear market. In other words, as long as a bear market doesn't come, it's better to maintain a positive mindset. That's what I believe. That's why I've been continuously presenting you with a positive outlook recently, saying that the foundation has been laid for the United States stock market to keep rising. Right now, it's a Goldilocks situation. The reason I'm saying this is because, at least in the short term, the probability of a bear market seems very low. That's because bear markets usually occur during cycles when interest rates are rising or when the United States economy is declining. But from my perspective, I don't think the United States stock market will experience a difficult situation where it drops more than 20% for the time being. That's the view I'm sharing. But right now, there are a few examples that Future Sula mentioned. In 2023, as a lot of government bonds were issued, there was a downturn for about 3 months from the end of July to the end of October. First, we need to clarify some terms here. A downturn refers to a bear market. So, when stock prices fall for about 3 months like this, we usually call it a correction. And since it only dropped about 10% from the end of July to the end of October, it wasn't even a proper correction. A proper correction is when the market drops by about 18% or 19% like what we experienced in April. That's what you can consider a more difficult correction. So the stock price is dropping about 10% over 3 months from July to October. 2023 is like this. You can just see it as a buying opportunity, and no one knows when these buying opportunities will come. So I think the decline you just mentioned is right here. July 2023, here it is. Here the stock price dropped for about 3 months, and as I mentioned earlier, it fell by about 10%. After that, it continued to maintain an upward trend. These kinds of corrections keep appearing from time to time. So, if investors are afraid of corrections, they can't proceed with investing. When I revealed the United States-based returns, I briefly showed you this. If you look at the period returns here, some quarters show negative returns and some quarters show positive returns. Some quarters saw returns surge by over 35% or 26% in a single quarter. However, during that time, there were also declines of up to 22%. If you look at this when you have a large amount of investment capital, it's really terrifying. In my case, my investment capital is over 1 billion won. In that case, there are times when I experience a loss of as much as 220 million won in a single quarter. You must be able to endure such losses to enjoy gains of 220 million won, 227 million won, and more during a bull market. So what I want to say here is this. A correction happens at least once a year. So if you have the mindset that you want to avoid corrections, investing will end up becoming very difficult. So in the end, it's important to keep generating cash flow. When I get my salary, I keep accumulating cash that I can invest next. And for those who don't have good cash flow, or if you're a bit timid and have a hard time when stock prices fall, for people like that, I think the only way is to secure a sufficient proportion of cash. I'm also pretty resilient when it comes to stock investing. But even so, I always keep about 20% in cash. Because when it comes to investing, I think the process is just as important as the results. And as I showed you on last week's broadcast, there's no better way to invest than to maintain steady returns and invest for the long term. In order for us to keep growing our investment funds using the magic of compound interest, it's really important to stay calm and comfortable over the long term. It's really important not to leave the stock market after experiencing heavy losses or to avoid making big mistakes that lead to significant losses. I want to emphasize once again that the best way to reduce mistakes and stay in the market for the long term is to always maintain a certain portion of your portfolio in cash. I'm not sure if I answered your question well. Alright, let's get started with today's Big Two Shin news prepared for July 7th. In this Monday broadcast, we'll review last week's United States stock market trends. First, let's take a look at the S&P 500 map. I've set the period to 1 week. At a glance, you can see that green is completely dominant. There are very few stocks showing red, and among the green ones, you can see a lot of bright green as well. So it's safe to say that the atmosphere of the United States stock market over the past week was very positive. If you actually look at the movement of the indices, the one that showed the best upward trend over the week was the microcap index. Microcap refers to small cap and ultra small cap stocks. If you look below that, small cap is up 3.28%, and mid cap stocks are also up 2.81%. So over the past week, small cap and mid cap stocks performed really well. But large cap stocks also did quite well. The Dow Jones rose 2.3%, the S&P 500 gained 1.7%, and the Nasdaq 100 climbed 1.48%. So to sum it up, over the past week, regardless of sector or stock size, all stocks showed a strong upward trend. But among them, there are some particularly noticeable aspects. Mid-cap and small-cap stocks, which had been underperforming until now, showed very strong performance, leading to a rotation in the market. I think we can summarize it like this. It's the same when you look at the performance by sector. Over the past week, in fact, there were hardly any sectors that went down. The fact that there were no sectors that went down means something. Funds are being distributed. Therefore, as the market breadth is gradually expanding, money is now flowing into sectors that have been sluggish until now. That's how we can sum it up. Next, let's take a look at the market breadth of the S&P 500. It's improved significantly, reaching 78.5. This means that out of the top 500 companies, there are almost 400 stocks with good short-term trends and strong momentum. Since it's almost at 80%, and the number of stocks with good long-term trends has also far exceeded 60%. So the long-term trend looks really good. The percentage of stocks with prices above the 200-day moving average has finally surpassed 60% after consistently remaining below 50%. This is a very good percentage. On the other hand, the short-term trend has become a bit too hot. Now almost 80% of the stocks have risen above their 50-day moving average. Therefore, here and there, little by little, signs are appearing that things are getting too hot. Personally, this is how I see it. Next is the VIX index. The VIX index is still okay for now. It's at 17.86. So you can see that the market is still staying very calm. Next is the fear and greed index. It has finally moved into extreme greed. Until last week, it was fluctuating in the greed zone, and I said it was very good because it's not too hot, but at the same time, the mood isn't cooling down either. I evaluated this atmosphere as very desirable. Now, as it finally rises to 78, you can see that the market is getting a bit hot. A correction might come, and technically a decline is expected. Next is the market score. It has gone up to 91, and 91 is very high. Recently, we haven't really seen this kind of situation. Let me show you. In the past year, I don't think the market score has ever gone up to 91. Right now, 83 was the highest, and that was in December. It was also high here at 84, and in June, 86 was the peak. So right now, if we look at the market score, 91 is an unprecedentedly high score, so I think it's fair to say the market is overheated. Next is the performance of Mijuan's top pick. Mijuan's top pick also maintained a very strong trend over the past week. Especially you can see Nextracker at the very top. Nextracker's stock price jumped 13.2% this week, primarily due to two key factors. First of all, 2 weeks ago, that is, the week before last, Nextracker's stock price dropped significantly. You might remember the reason. There was some very bad news. The United States Senate Finance Committee unveiled a bill to gradually phase out tax credits for solar and wind energy by 2028. So at that time, stocks related to wind and solar power dropped sharply. At that time, Sunrun plunged by 28%, and SolarEdge also dropped sharply by 22%, showing a very negative trend. Alright, therefore you can see that when a stock price has plunged like this, even a small piece of good news can provide an opportunity for a sharp rise. In fact, there was a piece of positive news last week. Now, big beautiful bill, this is President Trump's tax bill. If you look here, after several days of intense negotiations, the United States Senate passed President Trump's latest tax and spending bill, and the Republicans removed the last-minute excise tax on wind and solar projects. Now, what we need to remember here for a moment is this. The good news this time is that the excise tax has been removed. So, it looked like a new negative factor was about to be added, but that negative factor has been removed. That's how you should interpret this. Instead, the tax deductions we looked at in previous articles are still valid, so the tax deductions we've been receiving so far will continue to disappear, and they are scheduled to be phased out gradually. I think it's important to remember that this part is still valid. The second good stock was Trade Desk, and this stock also recently dropped a lot in price, so it succeeded in rebounding. That's how you can see it. It went up 9.39% over the week. Celestica up 6.07%, Taiwan Semiconductor Manufacturing Company 4.82%, Strategica 4.54%, Google 3.45%, Amazon 2.90%, Nvidia 2.79%, B2 2.49%, Broadcom 1.85%, Vistra Energy 0.95%, and Bitcoin 0.78% to 108,921. And Uber also saw a slight increase of 0.5%. The rest went down. Meta fell 0.98% over the week, Crater was down 1.51%, and Talon Energy dropped 1.74%. In addition, Tesla was down 3.20%, AMD down 4.0%, and Palantir, despite rising 6.86%, showed the worst performance. So, over the past week, the United States stock market has maintained a very positive atmosphere and impressive momentum, with United States stocks reaching all-time highs. In such a short period, it was really a brief moment. With the United States stock market's sharp upward trend, people are questioning whether the rise is sustainable or if it's time to sell. Right now, I feel a bit afraid to invest. So I'm really curious whether it's better for us to keep investing or if we should increase our cash holdings. At a time like this, is it really wise for us to sell our stocks? Honestly, I don't know the answer to that either. But when we don't know the answer like this, we need to look at the past. Let's see what the statistics were like after similar situations happened before and try to find the answer that history gives us. Now first, let me show you one figure. Since 1990, looking at the statistics of the United States stock market, the United States stock market usually hits an all-time high about 20 times a year on average. That's an amazing figure, because there are 52 weeks in a year, right? But if the market hits an all-time high 20 times in those 52 weeks, what does that mean? It means that in the United States stock market, usually every 2 or 3 weeks, it hits a new all-time high. You can look at these kinds of historical statistics. The all-time high effect is not a significant event occurring every 2 to 3 weeks. This is the proper perspective to have on the matter. And I'll show you a chart. The title of this chart is Don't Fear All-Time High. All-time high means the highest price ever, right? The topic is Don't be afraid of the all-time high. If you look here, the graph is shown in 2 colors. The blue color represents the days when the S&P 500 hit an all-time high, and it shows the statistics of the United States stock market after those days. The gray color next to it represents the other days. We're looking at the statistics for the days when the all-time high was not reached, as well as the days when it was reached and the days after that. First, let's look at the return after 1 year. If we look at the return 1 year after reaching an all-time high, the United States stock market usually went up by about 9.4%, while the average return was 9.1%. Investing on the day the market hits an all-time high led to higher returns, including over a 3-year period. If you bought stocks on the day the market hit an all-time high, they went up by 29.1% over the next 3 years, while on other days, the return was only 27.3%. The average 5-year return is similar, at 50.2% when starting from the day the market hit an all-time high, compared to 48.5% during other periods. Therefore, just because the market has hit an all-time high, there's no reason for us to leave the stock market or reduce our stock holdings. That's how we can sum it up. Now, I think this is something we should keep in mind.
It's important to start with a small dream, planting a hopeful future together. Growing little by little every day. Is there excitement blooming in your heart? Let go of your greed. It won't be any different this time either. The result is just a continuation of the process. Even if dark adjustments come, I'm not afraid. I'll hold on to Miju's hand and move forward, becoming the light for the unseen tomorrow. Happy investing, supporting each other's dreams, walking together down a beautiful downhill path. Happy investing together with Miju, all of us boldly, until the day we all retire at market price.